In 2014, Nvidia traded at a mere $11 billion market cap, dismissed and underestimated by most. Investors who saw past the noise, who trusted the fundamentals and dared to envision its explosive future, didn't just earn substantial returns, they became millionaires. Unfortunately, most people missed it, swept up in the chorus of skeptics claiming, "It's overpriced" or "Its growth has peaked." Those doubters lost out on one of the most incredible investment opportunities of our generation. Fast forward to today, and history is repeating itself in the shadow of Nvidia's meteoric rise. I've identified 3 hidden gems following the exact same path, trading at shockingly low market caps. The first at about $11 billion, the second under $9 billion, and the third an astounding sub-$4 billion. These companies are battered, overlooked, and misunderstood in the wake of recent market turbulence, but they're quietly posting exceptional earnings and impressive growth. Just like Nvidia in its infancy, these stocks are poised to reshape entire industries, revolutionizing areas that most investors aren't even paying attention to. They stand at the very same crossroads Nvidia once did, ignored by the masses, yet on the brink of explosive potential. Today, I'll uncover why these overlooked stocks represent the next generational investment opportunities. Tune out the doubters, trust the fundamentals, and pay close attention. Missing this video could mean missing your chance to become the next millionaire. Let's dive into the first hidden gem, Celestica Inc. SOT, CLS. A high-growth AI stock that's quietly shaping the future despite a recent 20% drop, which has left it significantly undervalued. With a market cap around $11 billion, Celestica mirrors Nvidia's early years, discounted, misjudged, and ignored by most investors. But take a closer look, and you'll uncover a growth story that's unfolding at lightning speed. Celestica's latest revenue shot up by 21%, hitting a staggering $9.65 billion, largely driven by explosive demand in its connectivity and cloud solutions segment, which grew 40% year over year. What sets Celestica apart is that it's not just assembling hardware, it's designing cutting-edge data center switches, AI servers, and defense electronics. This is far from your typical electronic manufacturing company. Celestica is a next-gen hybrid, carving out a high-margin, lucrative niche in the AI hardware market. A prime example of Celestica's innovation is the DS5000, a 2U64-port, 800GB Ethernet data center switch designed specifically to accelerate AI and machine learning workloads. By working alongside hyperscale cloud providers, Celestica has transformed itself into not just a supplier, but a critical development partner. Looking at the financials, Celestica is in excellent shape. Free cash flow skyrocketed by 50%, adjusted EPS surged 58%, and net earnings exploded by 75%. The company has a solid balance sheet, low leverage, and is actively rewarding investors through share buybacks. With the explosive growth in AI infrastructure, Celestica offers a conservative upside of at least 30% over the next 12 months. But with demand only growing, the true potential could be much greater. Like Nvidia, Celestica is on the cusp of transformative growth. This is a hidden AI champion that savvy investors simply cannot afford to overlook. Next on our list is Credo Technology Incorporated, CRDO, an undervalued company that's quietly revolutionizing the hyperscale data center industry. With a market cap under $9 billion, Credo operates in a highly specialized emerging field that, like Nvidia, remains largely unnoticed by the market. Credo isn't just another semiconductor company. It develops advanced active electrical cables, AECs, that are absolutely critical for high-speed data transmission, powering data centers, AI infrastructures, and next-gen networks. As the demand for ultra-reliable, high-speed connectivity surges, Credo's technology is perfectly positioned to take advantage of this explosive growth. Credo's results are nothing short of remarkable. In Q3 alone, revenue surged an eye-popping 154%, hitting $135 million, almost matching 70% of its entire previous fiscal year's revenue in a single quarter. With gross margins nearing 64%, Credo is proving its competitive edge, rivaling major players like Broadcom. One of its breakthrough innovations is the high-wire zero-flap AEC, which offers over 100 times the reliability of traditional optical solutions, ideal for the massive AI clusters connecting tens of thousands of GPUs. While concentration risk from hyperscaler clients remains a short-term concern, Credo is aggressively expanding, adding more hyperscalers to its portfolio, which should significantly boost profitability. Given the global AEC market is projected to reach $25 billion by 2032, Credo's current market cap is an absolute steal. Those who recognize Credo's potential today, much like those who bet early on Nvidia, are positioning themselves for massive returns. This is a generational opportunity hiding in plain sight. Finally, let's talk about Zeta Global Holdings Corporation. Zeta, a marketing tech powerhouse that's deeply undervalued, trading at under $4 billion. Recently pummeled by a sharp 22% sell-off, Zeta is strikingly similar to Nvidia in its early, misunderstood phase. Despite its undeniable strength in AI-driven marketing, many investors overlook Zeta. But what makes Zeta special isn't just its traditional digital marketing. It's an AI-powered juggernaut that's redefining how marketing is done by combining powerful first-party data with cutting-edge AI technology. In just the last quarter, Zeta posted record revenue of $315 million, a staggering 50% year-over-year growth, driven by accelerating client adoption and innovative solutions like Zeta Direct, which integrates the recently acquired LiveIntense publisher network with its proprietary AI-driven data cloud. Zeta's client base is growing rapidly, with scaled clients expanding 17% year-over-year to 527 major customers. Even more impressive, its super-scaled clients, those investing over $1 million annually, grew 13%, showing deepening relationships and surging demand for its AI solutions. With a net revenue retention rate of 114%, Zeta is proving its ability to consistently upsell and expand its existing partnerships. Long-term, the company is projecting to hit $2.1 billion in annual revenue by 2028, representing over 20% compound annual growth.